Well, good afternoon, everyone. Thank you so much for taking the time to join us here for this little webinar. We have a lot to share. We are excited to be able to present you with some of this information and how it impacts you. Specifically, these changes are dedicated to the short-term rental filing for San Antonio. We are going to cover, like I mentioned, a lot of information. If you have questions, please direct them to the chat. We're going to keep this as open forum as we possibly can without slowing some momentum. Put them in the chat. They're going to get routed to us. And when I find open spots to be able to insert them, we will certainly do so. So please do not pull back there. Today, really, we have on the call, we have Miss Brandy Sander and myself. Brandy is truly a dedicated rep from Avenue to serving San Antonio. She is a solution partner in a leader, really, in this area of short-term rental with San Antonio. Myself, I am here to drive best outcome. I'm here to facilitate today's call, but ultimately I oversee the relationship that Avenue has with San Antonio, and ultimately you guys being the taxpayer, making sure that we're providing everything that it is we can to see that you guys have a successful and filings and experience. A lot of you already know who we are, but on the off chance that you don't, we at Avenue have dedicated really the majority of our business to tax administration. We service 3,500 state and local customers. That's across all 50 states. That's something that we're incredibly proud of. We've been doing this for 40 years. San Antonio is just one of the many large customers that we utilize or that we work with in the area of short-term rentals and specifically the tax filings to allow an efficient operating government to make paying taxes, which not everyone loves, but a seamless process for you guys. Today, we're going to talk a little bit about the why. We're going to talk a little bit about the why. Why are the requirements changing? How's it going to impact you? It's like I just said, how it's going to impact you, but how does this apply to me? Everyone's got their own personal experience, thoughts, opinions. Hopefully we cover a lot of that here today. We're going to also cover what it looks like. I'm a visual learner. I know many of us out there are. We're going to spend some time, some detailed time, highlighting what it looks like, what the flows are, and what's new about the flows from what you guys have already experienced with inside of your filing experience. We're going to go through some FAQs. So whatever questions you have, we're going to see them in the chat. I think we already have some coming in, but with that, like I said, we'll insert them as we go, but we'll share some general themes that we've had. And then from there, if there is, and I believe that there will be ample time on the back end, again, this is about you guys who have taken the time to join us here today. So please know that we will slowly but surely sift through and make sure that everyone walks away from this webinar here today feeling like they've had a successful hour of their time. And with that, I hand off to Brandy to discuss our and the why.
Thank you, Matt. That was a great introduction, and thanks to everyone that joined us live today, and for those that will watch this later on YouTube. We appreciate your time, and we're going to be sure that this is meaningful content for you. So just to get us kicked off, I know you all realize at this point that there's some changes coming to the tax structure and also to the form that you use online to file and remit your hotel occupancy taxes for your short-term rentals. So essentially, really, to recap, what we're doing is in the form as it existed before, all we're doing is adding a couple of lines for you to be able to account for some deductions, right? So you're going to report your gross proceeds, and from that, we're going to allow you to deduct out any transactions that are that occur on the platform of Airbnb or HomeAway. So the why behind this is moving forward, Airbnb and HomeAway are going to collect some city taxes for some of you if you have your property within the city limits of San Antonio. Today, as Airbnb collects for certain areas, if you're sitting in the chair of the finance department and you're receiving the funds from Airbnb, or HomeAway, there's no backup detail. There's no reconciliation with that. They just get the money, the tax dollars deposited, which is great. But from the perspective of the tax collector, it's really hard when you don't know who paid those taxes, right? So you all, outside of what we're showing you today, if this wasn't in place, you wouldn't be getting credit to your specific account, to your filing histories for those taxes, right? Another why that we're doing the changes that we're doing is because none of the platforms are going to collect any county tax. So to one of the questions that I've already seen from Angela, we are going to talk about the county tax today as well, and how that applies to that and affects that. You all know that it is very important to maintain accurate filing histories for your properties as you're registered with the city. Any number of events could happen where it would be very important for you to be able to reach out and get a tax clearance certificate, specifically if you were selling your property. So without this mechanism in place that we're going to show you today, it would be really hard for the city to account for the taxes you paid, and give you an accurate tax clearance certificate. So and because we're allowing the deductions now, and that's going to be data that's visible for the collectors for San Antonio, it's going to give them a way to reconcile the data, or the money, the revenue that they're getting from Airbnb and HomeAway, so they can pull a report with your deductions and compare that to what they're getting from Airbnb. And hopefully that's really, really close every month. And then finally, again, because this is for you, we want to make your experience convenient. So putting this in place across the board is going to really make a more equitable playing field for everybody involved in the lodging industry. So with that, we can move to the next section of the agenda, Matt. Unless did I leave anything out? My partner here?
Nope.
We're good?
Covered it.
Okay. So, of course, we need to talk about who is affected. And this graphic is probably not going to be new to you. I think this was created by the city of San Antonio. And essentially, it's just going to detail you're basically going to fall in one of two buckets. Okay. If you are renting, or if you're booking your rooms through a platform that is going to collect and remit state hotel occupancy tax, you're going to be the top row, right? So in January, which January is going to be your remit date for your December taxes, you're going to report and pay that through the Avenue website, as you probably already have been doing. Nothing is going to change there. February, the same thing. For your January taxes, by February 20th, you're going to pay and remit that through the Avenue site. But in March, for your February taxes, so in a few weeks, you are going to report the February city and county hotel occupancy tax through the Avenue site. And that means you have to file the full amount and list your deductions like we were talking about. And you're going to pay your county taxes through the Avenue site. Okay. On the flip side, if you're in the other bucket and your platform does not collect and remit state hotel occupancy tax, so if you're not booking your property through Airbnb or HomeAway, basically nothing's going to change for you. You're going to file and pay your December taxes through the Avenue site. Same thing for your January taxes, and same thing for your March taxes. I just want to highlight that if you list your properties on multiple platforms, so you have the property listed on Airbnb and then maybe a different platform as well, if the booking occurs on the different platform, then you're going to have to file and report those taxes that do not go through the Airbnb and HomeAway platforms. So we're going to break this out a little bit better as we go through here. And so we can transition to the next slide, Matt.
Quickly on that, there's a question I think pertains to exactly what you just said regarding HomeAway for VRBO. How does this pertain to VRBO in a payment of taxes?
So I may have to lean into Christy on this one, because I'm not sure if VRBO is an affiliate of HomeAway. Christy, can you chime in and let us know that? So essentially, from a high level, if the platform is collecting state hotel occupancy tax for the state of Texas, the new ordinance in San Antonio is requiring them to also collect the city tax. So Christy, do you know if that includes VRBO?
Currently, it's just Airbnb and HomeAway. We're working, hopefully, that it will include VRBO in the future, and the places like Evolve and a few other platforms. But if you are not, when you are working with your platform provider, if they're not collecting and remitting that city tax, and you should see it on your transactions and information that you get back from your platform, whether or not they collected and remitted the city tax, you still must pay that tax, to the city and the county as well.
Okay. Perfect. And thank you, Christy. And I see there's a few other questions coming through here, Matt. If there's any of those questions that we need to pause for, have you?
Yeah, well, I'll pause and actually address the state tax. There was a question regarding whether or not we plan to be able to partner or be able to remit state tax. And at this time, we do not have that. We don't have any plans for that here in the future. We obviously want to be able to make it the filing process as seamless as we can, but it is not something we can currently do or foresee being able to do at this time.
Okay, perfect. Thank you very much, Matt. So, so what we're going to do is just quickly, we're going to walk you through what the form looks like, and we're going to highlight the specific changes, which again, I think are minimal. And this is going to look very familiar to many of you because this is where you're already filing your return. So again, on this first piece here, you're going to select the button to file a new return. This should be the same as you've always done. And then after you select that button, it's going to bring you to the next screen. Oh, there we go. Again, this is going to be very similar as well. You're going to select the state that you're filing in. So for you all, it's going to be Texas. You're going to select your filing period, and then you're going to select the return as the San Antonio short-term rental return. I don't think any of this is going to be different. And then you're going to select your location. If you have a particular, if you have multiple properties, you've set all those up. So you'll click the next button, and that's going to take us to the next screen. Now, this is the screen where you're going to see some changes, right? So if you look at rows A, B, and C, row A is going to be the same as it was. This is where you're going to report your total receipts, okay? So if your property was rented or booked off platform, on Airbnb, on HomeAway, no matter where it was booked, all of your total receipts are going to go in row A, okay? Under that, you now have in row B and C, you have two fields for deductions. So if your transaction happened on Airbnb, you're going to deduct that amount in row B. And if you had transactions that happened on HomeAway, you're going to report that on row C. You may have booked some on both platforms, and you'll just have to plug those deductions in accordingly. You could have a number in just one of those rows, and you could have a number in both. You could also have rented all of your properties and booked them through the Airbnb website, theoretically, just for purposes of an example. And if your total receipts were $10,000 and everything went through Airbnb, you may have $10,000 of deductions, which would bring your taxable receipts for the city to zero. However, if you notice, well, I think let's go ahead and click to the next slide because I don't want to get ahead of myself here. Okay, so under rows A, B, and C, all of those next columns are going to be, oh, you could go back one more, I think. All
Apologies.
of those next columns, it's okay. All of those next columns and rows under rows A, B, and C are calculated fields, right? So when you report your total receipts and then you enter your deductions, which is going to reduce your total receipts, that reduced amount is going to go into the San Antonio column under taxable receipts. So you can see in this specific example, there was $10,000 of total receipts. There were some deductions for Airbnb. There were also some deductions for transactions that were booked on HomeAway, and the net taxable receipts in where it's got the little bullet number 2 is $4,500. That's automatically calculated for you. You're not going to have to do any calculations there. Your tax, your penalty, your interest, that is all going to be automatically calculated. But I want to just direct you to the county side for a minute because the platforms are not collecting any county tax. So while these fields are automatically calculated, they're calculating a little bit differently because they're not giving you credit for those deductions. You did not pay your county tax through Airbnb or HomeAway. So it's going to have the taxable receipts as the full amount here. and it's going to calculate the appropriate tax, penalty, and interest there. And the grand total at the bottom is just going to sum both of those columns up for your tax due. Okay.
Hey, this is Christy. I want to bump in because somebody had a couple. I'm sorry, Brandy. I saw a couple of questions here specifically
Totally
about what deductions were, what they report. So in essence, when property owners are renting their properties through these platforms, we know that many property owners will use Airbnb or Vrbo and HomeAway, as well as they may have another platform or rent them individually. So your total receipts is a total of your rents, the rental receipts that you receive that you have rented. So if you've rented your properties for $10,000, either directly, Airbnb, VRBO, that's going to be combined. And in the column B is the deduction. So whatever taxes that was collected by VRBO or Airbnb, you would take that total dollar and you would put that number into these columns, and it's going to deduct that so that you're not going to remit that. So the total receipts would be basically the total receipts plus, and you have to enter those deductions.
Yep. Thank you, Christy. And just to be clear, the row A, your total receipts, this is your total rental revenue, and your deductions are the rental revenue that were booked on the platform, not the taxes paid. We're calculating the taxes out. So you're deducting the entire rental revenue that happened on sites like Airbnb and HomeAway.
Right. So if $4,000 was Airbnb, you're going to put that so that you're not going to be remitting the tax on the $4,000. The same for VRBO. The only thing for the city that you're going to remit tax on is for the portion that was not rented through Airbnb or VRBO.
Correct. And your county tax. So the mechanism here is to give you credit for the things that you pay through Airbnb or HomeAway, and they're sort of acting as a collector. Again, they're sending that money, those tax dollars, in directly to the city on your behalf. Mm-hmm. And what we're doing is we're just getting you down to the remaining taxable amount for the city. And again, that might even be zero if everything went through Airbnb. And then we're also making sure that you have a place to file and pay your county tax. Because again, none of these platforms are collecting any county tax on your behalf. That is still going to be, and it has always been, the full responsibility of the property owner. So hopefully this is helpful for you to have more accurate filings and to maintain your filing history. So the next thing we'll look at, another slight change, nothing major, but at the bottom, there's now a checkbox for acknowledgement. And so to advance to the next section of the portal, you'll have to check that checkbox. And then you will, at that point, just click next. And that is going to take you to your payment screen, which we're not going to walk through in detail because nothing is changing with that. So the way that it's always looked for you to actually remit your funds, the payment screen, the checkout screen, that is all the same. So at this point, we've shown you the changes to the form. Again, very minimal. You're getting 2 lines for deductions for transactions that happen on Airbnb or HomeAway, and you're getting the acknowledgement box at the bottom. And so, I mean, it's simple enough. Let's see, what do our questions look like? Do we have anything new in the chat?
Yeah, we have a couple flowing in that we'll address. So Christy and Brandy kind of flowing through here. I'm going to pick up a question from, we have Olivier. We have, if we're using multiple platforms, does that mean we are now going to be responsible for going through every single rental record individually to find out how much we collected from each?
I can take that question.
Oh, yeah. Okay.
Yeah. So you're not having to go through each rental record. So on each platform, you should have a report that shows you how much was collected and how much was remitted on your, from Airbnb or VRBO. So you're going to be responsible for retaining those records and file. But as far as looking at each individual record, you should be able to go into that platform and work with your platform provider to provide that information.
All right.
Thank you. We have from Kathy, where is the row for exemptions?
So by exemptions, are we talking, and I know that we're not interactive with Kathy right now, but would that be something that would be like, I don't know, rentals to governmental employees or something like that? Or do you?
Yeah, so the column A is the total taxable receipts. So maybe we might need to change the word so it's taxable. So if you've had like a military person rent, that total receipts is not going to include like the military folks. But the deduction, you're not just deducting the tax that was collected. I saw a question on here from Martha. It says when VRBO or Airbnb state they are remitting the taxes and that is paid to the owner, is that the amount we are listing for deduction? So going forward with this new law, VRBO and Airbnb HomeAway will be collecting the taxes. Instead of remitting it to the owner, they are remitting it to the city portion, not the county portion. This is city portion only. So this deduction that you're entering is if you had rent of $300 and that was the rent, not including the tax, and your platform should have a report for this. That is the amount that you're going to deduct. You're going to deduct the $300 that you charge somebody per night for the rent. This is the deduction. So you're not paying taxes on rents where you didn't get paid taxes by the platform.
Mm-hmm. And Christy, you make a good point, and I do like the question about the exemptions because, on the back end, internally, maybe we do need to look at adding total taxable receipts there so that they know that ahead of time to back out those exempt transactions, governmental employees, military employees, things like that. That's a good question, which I appreciate, and our team will kind of work on looking at if we can add that one word in there. I think it would be some clarity. Do you agree, Christy?
Yes. Yes.
Okay. Good. Thank you for that.
There was a question asking, is the total receipt the amount of your payment from Airbnb and HomeAway, gross amount less their fees equal payout? So to answer that is in this top column A is going to be your total gross, again, as they were just saying, taxable receipts, including your Airbnb and HomeAway. Is that correct, Christy? Brandy?
Yeah,
yes.
Yeah. Mm-hmm.
All right. We have a question, and I think that this has been echoed a couple times over here in this thread, is does this mean we have been overpaying our hot tax and now we won't? If so, do we get a refund on overpayment prior to March?
So I think the answer to that is no. These changes are new changes. So before the March filing period, the deductions were not on there. So Christy, I don't think there's a path or anybody would have been overpaying or duplicately paying their taxes.
No, they shouldn't have been. No, because this is not like a double taxation. It's like before today, before March, they were not, or February, the platforms were not collecting the tax and remitting it to the city. They were remitting it to the property owners. So you had been remitting the tax that you received from Airbnb. Airbnb did not remit anything to the city. So really now it would not have resulted in any overpayment.
Yeah, and honestly, putting these changes in place and building this form out for you all is going to prevent any overpayment because we're giving you the option to deduct those transactions that you already paid taxes on through those platforms. So good question. Thank you for that.
Yeah, there's a question from Donald, and I think that this is just a good clarification question for those. We have when would be the case? When would be a case that B plus C would not add up to A? So again, I think that when B plus C would not add up to A is when you have people staying and purchasing their stays through a website that is not Airbnb and HomeAway.
Well, yeah, so let me chime in here. Theoretically, B and C would never exceed what's in A. If we're talking about in-month transactions, Christy, correct me if I'm wrong here. Maybe it's just the accountant and me coming out, but if you are taking a deduction for a prior period, then that probably needs to go back and be an amended return. Like in theory, if your total receipts are 10,000, and that's your total bookings for the whole month, I don't know of a scenario that would cause you to have $11,000, for example, as allowable deductions, unless you're using a deduction that occurred in a prior month. Does that make sense? Are you with me, Christy?
Yes, and I did see a question. It was talking about prior month's rents. I guess that's if it is a prior month's rent, it is not and it's a prior month's rent through Airbnb or HomeAway, and that prior month, that rent has already been paid and collected, then that would not be a deduction, because essentially you should have already been paid, for those taxes if it was paid in advance of February to you guys. So
Right.
that would not be a deduction. Now, and also I know some of you guys, there could be a boutique platform that you use. You may rent direct, and that would be a situation where B and C do not total, A. It's going to, B and C, if you are renting through any other platform or any other method besides Airbnb and VRBO, then, if you are only renting through Airbnb and VRBO, it should equal A. If you're renting through other platforms, it would not equal A.
Right. Or off platform direct
Yes.
bookings, Facebook
Mhm.
Marketplace, any
Right.
of those methods. So these deductions again are allowable only for transactions that occur on the platform for Airbnb and HomeAway.
Yeah.
Right.
There's a couple of questions regarding the county between San Antonio and Bexar County. We have, just to quickly, these total receipts broken out to 2 columns will then carry over. We do, so there's a question specifically that says, what is the reason why Avenue has decided to not also include the county tax payments due? So this is the county tax over here in this column over the side. You're going to see that the total due is going to be for both county and San Antonio tax based off of A, B, and C. So
Yeah,
we
that's
are collecting county tax.
Yeah, and so just to spotlight, and you're absolutely correct, Matt, that bold total due, that's, I think I'm getting old and I can't really see, but I think it's $580. That's a summation of the San Antonio and the county column, because everybody is going to be subject to county tax, whether you're in the city limits or out, and nobody is collecting that county tax on your behalf. That is going to be on the property owner. Now, I will say, and Christy, keep me honest here, when you set up your properties to select your return to file, if you are outside of the city limits of San Antonio, when you select your property and you've indicated your location, they're not going to see the San Antonio column here. They're not going to even have a calculation option for city tax if they're just in the county, like outside of the city limits. Is that correct, Christy?
That's correct. Mm-hmm.
Okay. I had a question earlier that I saw in the chat about addressing the folks outside of the city limits. So hopefully that answers that early question that we had.
There's a
And
couple.
I see several questions about the hotel occupancy tax or occupancy taxes.
Yep.
And what we're talking about today is the hot taxes, the hotel occupancy taxes.
Yep.
We love acronyms.
Yeah.
All right. Looking as we continue to go through the thread, thank you so much for everyone that's engaging. I think I have to imagine that there's a lot of shared themes here, so hopefully we're getting to all of them. I see here, and I think we touched on this a little bit, but from Patricia, we have, how do we pay taxes for reservations made prior to February 1st for DOS after February 1st. I understand that we still pay the entire hot tax. There's how do we pay some hot taxes and some county taxes only?
So this is an interesting question, and I want to be sure that I understand the question. So Christy, I'm going to kind of direct this to you, but what is the point of, and this is just me, I don't know this personally, I know Christy does. What is the point of taxation? Is it at the booking? If they book it in advance, let's say they booked it, paid it in January, but they're not staying until May. What's the point of taxation? I think that's what the question is.
If it is booked, let's say that it's booked in even December, and if they paid for that rent in full, including the taxes, and you have been paid that by the platform, and the transaction occurs before February, then that would not be listed as a deduction. You are still responsible for listing it in your total receipts. Don't list it in your deductions, and the system will calculate the tax. I get that. People do plan in advance, and they pay in full. If they booked in advance and they're paying for it later, I don't know if there's any agreements or contracts whenever they submit the booking saying it's going to include everything, and it might be. If there's a contract there that says it was included, That is a question I'm going to have to clarify with the city if there's any type of, grandfathering language for that. But at the end of the day, if Airbnb or VRBO is not remitting it, and they probably are not going to collect and remit it prior to the February tax period, then the property owner is responsible for remitting that.
Thank you, Christy.
Yeah, thank you, Christy. We have a question. Please confirm that this change is for the month of March and on. Confirmed. That is correct.
That is correct.
We have a question from Hosted Havens. Thank you for the question. How are 30+ days, so long-term rentals, handled now? Is the same income placed in the total receipts, also in the deductions to cancel out?
So, Christy, again, I'm going to lean to you. I didn't even know if we would need Christy, and she's just so vital on this call. So thank you for being here and for having all this information. But I think, if I understand, if you're renting beyond the short-term rental guidelines of, 30 days, 29 days, whatever, if it's considered a long-term rental, that's taxed differently, right? That would be not.
Yeah, there's not the hot tax is not due at that point. For the hot tax doesn't apply if it's a long-term rental. That's what we refer to that if it's over 30 days.
Correct. And so even if that is a property that you typically rent as a short-term rental, if you have a stay that exceeds that threshold and it becomes a long-term rental for that stay, that's not taxable. Correct, Christy?
That's correct.
Okay. Hopefully that answered that question. Very good question. I love all these questions.
Yeah. There's a
Now I want to clarify something while it's on me, because I've seen the questions come through where you're asking if it's March or February. What we're talking about right now is it's February taxes that were collected in February. It's rentals, it's receipts from your February activity that's due in March.
Correct.
So I just wanted to clarify that.
Thank you.
So the effective date of the ordinance with the city that is going to require the platforms to collect the city tax along with the state tax is effective for February, correct, Christy? But due in March. Okay.
Yes.
Perfect. And, I know there's probably some other questions coming through, but seriously, I appreciate the dialogue here and all the questions. I love that you all are engaged and wanted to learn here. So thank you for that. And I'll tell you, this is not the last time that you're going to hear from us. We have a couple of additional training sessions planned for you all. This session will be posted online on YouTube, so easy to access and go back and rewatch and share it to other property owners that maybe couldn't attend today. So you'll have some more opportunities to learn with us and ask your questions. Have we covered all of them? I don't want to leave anybody out. I feel like it was just
there's been the home away and VRBO question has come up quite a bit. I think that is the fact that home away purchased VRBO, so that home away and VRBO are basically synonymous. I don't want to confirm that one way or the other at this moment. Maybe something we can communicate at a later date, unless, Christy, you have different insight on the matter.
No, I mean, by law, they're supposed to be collecting the tax because that was the regulations that are enacted and in place today. So they should be. I can't confirm that personally because I'm not using the platform. I will go out and look at the sites and we'll do some communication and look at, but even Avenue can't confirm that. If they don't collect it, at the end of the day, property owners are responsible for remitting it. So if they're not collecting it, make sure that you do remit it and keep your records.
Yeah, and that's what I was going to say. Just verify. There may be one collecting city tax that we don't even realize they're doing it. So as the property owner, if your transaction happens on a platform, just make sure you're aware of what taxes that they are collecting from you. Or not collecting from you. So, and if you want to, maybe just we'll touch on that last slide, Matt, because
absolutely,
I think it just sort of kind of since we don't have any other questions that I see, maybe we'll just kind of recap the big takeaways from today. And again, you'll have other opportunities to visit with us and have some more training. But just the recaps here: platforms that collect the Texas state occupancy tax on short-term rentals are now going to begin collecting the San Antonio city tax. So this is a change. This is new. Pay attention. None of the platforms collect the county tax, right? So that's why we've designed the form the way that we have, so that you're still able, even if all of your activity happens on Airbnb, you're still going to have a way in the form to report and pay your county tax, and you won't become delinquent on that. The big change here is we're giving you deductions fields now so that you can deduct all of those transactions from your taxable receipts and not be duplicately charged for those taxes. The platforms are going to be remitting those on your behalf, and you're going to pay taxes on the balance. So that's the design of the form. Not all platforms are collecting the city taxes, which is one of the points we just talked about. So don't just assume that they are. Verify that. We even had some folks before that thought just because the platform was collecting something, they were collecting everything, and they didn't realize their county tax wasn't going through the platform. So just double check what the platform is doing with your transactions, verify that, and make sure to be responsible for remitting what is not going through those platforms. And obviously any rentals that happen on other platforms need to be reported and paid by the property owners. No taxes are going to be collected and remitted on your behalf on other platforms. And again, even if your property is duplicately listed, you have it listed on Airbnb, but the transaction occurs off platform or on a different platform, those transactions are still subject to the tax for you to report and pay those. That's not going to be collected unless the transaction occurs on Airbnb. So those are the big takeaways from my perspective. While I was going through that, did we have another question? I don't want to leave anybody out, especially while we have Christy. She's such a good resource.
I saw a couple of questions about the county asking if why the platforms have chose not to collect the county taxes. Before a platform, and this is just, I'm speaking about their policy, but I just have our interactions and the City of San Antonio's interactions. For the platforms to collect, there should be some local legislation in place in the tax regulation, and the tax regulation and ordinance that was enacted by the City of San Antonio does not apply for Bexar County. So until there is some local regulations in place, the platforms will not collect that local tax on your behalf. They won't remit it. They'll collect it. They just won't remit it.
Perfect. Thank you, Christy.
And yes, you should be collecting county taxes, and I'll have to verify that rate. But yes, anytime you're renting within Bexar County, if you're outside the city limits, that county tax should be collected. And if you're inside the city limits, it's both the county and the city.
Correct. Very good. I think we'll just maybe pause for one more minute and give us a chance to skim through again. We don't want to miss any of the questions that may have come in the chat. I know for a minute there it was pretty rapid fire, and we definitely appreciate that interaction. It makes it a lot easier when we're hearing your questions here. So does it look like
Brandy,
we missed anything?
While we're giving it a few more minutes, I just want to clarify something with the group that's joined the call today. The changes on the portal where you guys are logging in and remitting your monthly occupancy taxes today through Avenue. For the tax period of February, when you log on, if you log on today or tomorrow, you will not be able to choose February until March the 10th. We're rolling out some last minute updates to ensure that the calculations are working correctly and going through some testing. So there is a 10-day window during March, but that's well, within the due date. You'll have plenty of time to file. So anytime after the 10th for February taxes, come to the platform and you can remit those. If you have January or prior tax periods that you need to remit and you're remitting them late for whatever reason, those periods will be open on the webpage. So you're at the right side if you go. It's just the first 10 days of the month. February tax period will not be available until the 10th.
Perfect. Thank you for highlighting that, Christy, because that is very, very important. I see a question here from Camille that you don't use the tax collection for Airbnb. So do you remit it manually to the city and county? So if the tax is not paid on the platform, so somebody is going to handle that tax and give it to the city. If Airbnb is not handling that tax and giving it to the city, if HomeAway is not handling it and passing it on to the city, then you will be responsible for doing that. So if you're not using their tax collection, then that will be your responsibility. Good question. And I think somebody posted in here that the county tax rate is 1.75%. Again, we can verify that. I'm sure that's online to verify that. That seems probably
That's
right.
correct. It's 1.75%.
Okay. Perfect. Okay. I'm not seeing anything else that we did. Do you
things
see
are
something
slowing
there?
down. Nope, things are
Okay.
slowing down.
Good. So let's look at this very last slide. Maybe you can just, if you don't already have, be the next one, Matt. Sorry, not the last, but the last. There you go. If you don't already have this number, just maybe jot this down, take a screen grab, save it. This is the support line. So any other questions that you have, feel free to dial in and ask those. You can reach a live person that way. Happy to continue to be a resource to you all. It's a partnership with all of us. Everybody wants to do the right thing, and we're a team here. So don't hesitate to reach out to that line. And again, we'll have future sessions for training. So feel free to join those, and I'm sure there'll be some additional valuable information. And I think one of the future sessions, we're even going to do a live demo into to the site and walk through the form, where today you just got screenshots. And that's all I have. Matt, do you have anything else? Christy, any closing remarks?
Just thank you for taking the time today. This, as Brandy said, is a partnership. We aspire to bring you guys the easiest filing portal and process that we can, and we appreciate you taking the time. It will make this exponentially easier for the city, for us supporting you guys. So thank you for taking the time.
Perfect. All right. Thank you, Matt, for joining me today. My partner in crime. I love doing stuff with Matt. He's always so fun to be with. And Christy, we would have been lost without you. So thank you so much for jumping on and supporting our taxpayers and their questions. And thank all of you for joining and for all the wonderful questions. So until next time, I think we're going to sign off.